The market giving a lot of cheer to Yes Bank because of the good behavior certificate.
The Nifty is down 47 odd points. We have the Sensex, which is down 126, mid caps, which are down 48 odd points as well.
We're pretty much near the lows of the day, and the frontline indices at least have headed a little bit lower actually from noon.
Teaser of how things would look every Thursday from here on, with the weekly options expiry both on the Nifty and Bank Nifty play out, and that's what you have. On the way down, you had the IOC, BPCL, both down quite a bit.
Wild swings on Dalal Street as Sensex and Nifty lose 0.5% each. Sensex tumbles below 36,000. Mid-caps buck the trend to clock gains.
Yes Bank stock rises 31%, posting its biggest ever intraday gain. The RBI finds no divergence in its asset classification and provisioning for the FY18 loan book.
Oil marketing companies slip as crude prices gain on OPEC production cuts. BPCL and IOC are the top losers on the Nifty. Paint stocks also suffer in trade.
Nifty Bank and mid-caps outperform benchmark indices. Yes Bank provides support to Nifty Bank, while NBFCs and PSU banks pull up the mid-cap index.
And Ashok Leyland rises 7% in trade after third quarter earnings shine. Margins and net profit beat estimates. DHFL sees a sharp recovery after joint MD and CEO Harshil Mehta clarifies to CNBC TV 18 his resignation is in line with the move to bring in a strategic investor. Well, those were the top 5 headlines from Dalal Street on a day when the market rocked from red to green and ended the day with fewer losses than was earlier feared. Hello and welcome to Markets Today Talkback, the show where we will tell you everything that happened in those 6 hours of rocky trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Ekta Batra. Hi Ekta.
Hi Lata, well good evening. Over the next 30 minutes we will be talking about those top 5 market stories, and our guests are going to be answering all of your stock queries. So joining us this evening is on the fundamentals Mayuresh Joshi and technical expert Mitesh Thakkar. Thanks gentlemen for joining in. Before we start questioning you about all what took place in the markets and all the queries that we got, well Lata, it was just a mix of red and green today.
Yes, actually today we had the raw material to start lower because crude prices were higher, and that's usually India negative, and we have already been serious underperformers vis-a-vis other Asian markets. But the positive was expected to be in the micros, especially Yes Bank. So it was a very mixed day. Hour to hour it was mixed. Mid-caps and small caps, mid-caps and large caps were a different story. Perhaps part of the blame lies in the fact that this is the first weekly Nifty options expiry. So maybe it is the shape of things to come every Thursday. So, we've seen last few days that stocks start in the green and end sharply lower in the last hour of trade. Today it was somewhat opposite, with the mid-caps being in the red earlier and then a sharp short covering rally. And it was probably mooted by Yes Bank and DHFL. People were so seriously short on Yes Bank that right from the word go they had to cover. Then came the DHFL explanation that the CEO is not quite quitting the group. He's only concentrating on finding a strategic partner. For whatever reason, the market chose to believe that it's a positive news, or at least not a negative news. There was then sharp short covering in DHFL, and that was followed by sharp short covering in a whole host of mid-caps. The usual suspects: graphites, chemical stocks, PSU banks, the place where people merrily make short covering bets, short bets, and today they were covering those short bets, and of course NBFCs. So that really was the story. The banking and the mid-cap index were the shining stars of the day, but it was not all bulls that ruled. The bulls were kept in check by crude. But you tell us all the stock-specific tales.
Yes, absolutely. Well, Lata, you're going to be talking about Yes Bank more comprehensively, but that had to be the stock of the day. It was up 30-odd% in today's trading session. Following that was stocks such as Z Entertainment, which were higher today, Indiabulls Housing Finance, which was up around 3-odd%, and Sun Pharma, which gained as well. In terms of a couple of stocks which were in the red, it was BPCL and IOC, both those stocks which were lower on account of higher Brent crude prices. Hindalco, which was weak. Both both the Bharti twins, which were in the red in today's trade, Infosys and ONGC ahead of its numbers. In terms of the broader markets, DHFL had quite a volatile and rocky session. Ashok Leyland, which reacted to its margins, so that stock was higher. Prabhat Dairy, weak numbers, that stock was lower. And a couple of other stocks included NBCC and Natco, which were in the red in today's trading session.
Well, largely bad results got punished, and we could see that in the NBCCs. We could see it in Repco. Well, not bad, but certainly subpar for the market. And of course, we saw it in Karur Vysya Bank as well. So a lot of bad results getting punished, and in the end, Ashok Leyland got a thumbs up from the markets. But as a whole, the Nifty is beginning to feel the weight of all the long positions of all these days. And despite a stellar performance from Yes Bank, of course, it's not a very weighty stock in the Nifty, the index simply could not pull itself up. So let's ask our guests what they make of this trend. Mitesh, what's the Nifty index telling you?
Yeah, see, I think, Lata, two things. One, we've started trading below 10,800. Now, that's a weekly pivot and a moving average level, and the weekly closing happens tomorrow. The structure is weakened with 5-6 days of fall, so I think in that sense, tomorrow would be very critical. In case we continue to remain here or trade below, eventually closing below 10,800, I think that will suggest that the medium-term outlook would be negative. Then I would look at a break of 10,750, 730 support, a test of 10,660 as the minimum, but more logically a test of 10,500 zones. In case we go up and recover and close about 10,800, we are in this broad range of 10,870, 880 on the upside, about 10,750 on the downside.
Okay, so basically it'll be a wait and watch day for you. All right, with that, let's get to the second headline.
Yes, absolutely. Well, Yes Bank stock saw a sharp surge in trade today. This is after getting a big relief from the Reserve Bank of India last night. The stock, in fact, hit its biggest ever intraday gain after the RBI audit found nil divergence in its asset classification for the FY18 loan book. Lata, what does this mean?
Well, you know, if you remember, like Axis, Yes Bank was the one that had suffered very badly because of a previous RBI inspection of his FY17 books. From, I think, around 1% NPA or 2% NPA, it had to report 6% NPA. So now with the change in management, the market was worrying that this last year of Rana Kapoor as managing director, did he dress up the books? And there was aggressive growth. So there were big fears that there could be, you know, some errors found by Reserve Bank. Errors were found. Errors are basically Reserve Bank's view of an NPA vis-a-vis the bank's view of an NPA. Sometimes this can be discretionary. And they found barely 100 crore of, loans where they differed. It's a divergence. Only 15% of the total NPA book is different from what the RBI thinks. So there was nothing to report. And that was such a big relief. It was one of the best kept secrets. So the market was seriously short, believing that there could be something in the inspection report. The new man who would come in, Ranveer Gill, could do some kitchen sinking. So people were prepared for the worst at 160, 170 rupees for the stock. And then, you know, you found the stock just opening over 200 when the news came that the Reserve Bank found no problem. So I can rattle out what all the brokerages said, but every investor will tell you that you didn't need a brokerage to tell you that major overhang on the stock goes, says Macquarie. Nomura says this could lead to near-term re-rating. All the re-rating came in a day. The target price is 245. The stock closed at 169 yesterday and practically raised to 245 in a day. And Motilal said that their stock price target is 270. So basically the market's guessed as much.
Yes, well, so it is a yes to yes, but let's get in a query then. Ashish Sharma from Punjab has written to us with a question on Yes Bank. He's been holding 1,000 shares of the bank at 244.5, short-term investor, and he wants to know whether he should hold or sell. Well, in that case, Mayuresh, short-term view on Yes Bank, what would you recommend?
Evening, Ekta. No, again, I think as Lata was mentioning, I think what the bank has probably done, I think two of the key overhangs are behind them in terms of the CEO appointment and the RBI divergence. What they do with capital raising, I think with CET1 at 9.2 is going to be critical. But again, I think as they're able to do that over the next few weeks or months, it is going to be accretive to the book because of the advances growth that they're expected to eke out over the coming few quarters in line with what they've done historically. So again, I think steady performance expected. Credit costs are expected to peak out as well, and that will itself give a propel to the return ratios. So an absolutely hold from my side. I think he should elongate his time horizon, because if they're able to raise money, I think the re-rating is around the corner and the book value multiples will also increase. So extend your time horizon and hold on to the stock.
Fair enough, but he wants a short-term view as well. So Mitesh, what's the next view on the chart over a month, over 2 months?
That's for Yes Bank, right?
Yes.
So I think, Lata, today, this big gap up which came with the good news has propelled the stock back to levels of 225, 230, which is where we've seen two intermediate highs. One was in November 18 and the other was in January 19. I think these are resistance levels, so maybe a couple of days of consolidation could happen over here. But I think eventually with this big gap and big move, the trend is on the upside, and I would look at now targets close to about 250, which is where the stock had bounced back to in October. So I think the October highs of 250 should be revisited. My advice is to hold and try to book profits around or just about 250.
Okay.
All right, so that's on Yes Bank, but let's get to the third headline of the day then. Oil marketing companies slipped in trade as crude prices have gained on OPEC production cuts. BPCL, IOC were the top losers on the Nifty, and paint stocks also suffered in trade. Manisha Gupta joins in now with more details. Manisha?
Well, not such a great day for the oil sensitives, as you had the crude oil prices running up for yet another day, and we are at a 2-month highs now when it comes to the Brent prices. We've seen the prices gain up above $64 per barrel as well. If you look at 2019 till time, it is up 20% for the crude varieties, and most of the fundamentals really seem to be working positive. To start with, it is the OPEC output cuts, and much of that chunk really comes in from Saudi Arabia, even as the number really comes in lower at around 10.31 million barrels per day. What IEA says, or what the oil minister from Saudi says, that they're looking to cut output below 10 million barrels per day as well, and that clearly has been supportive. IEA report says that with the kind of supply cuts that we are seeing from OPEC, Russia, the sanctions from US on Iran and Venezuela, we perhaps are looking at the global supplies coming down to 99.7 million barrels per day, while the demand estimates are expected at 100 million barrels per day or within that vicinity. So clearly we are reaching a balance when it comes to the crude oil demand and supply in the global markets, and that is adding premium to prices. Add to that, you also are looking at a very strong China trade data today. The US and China trade talks also are progressing well. The US president has talked about extending the March 1st deadline also. So almost everything that you're watching is positive. And then there's a Goldman Sachs report with that the prices can gain 5% from here in the next quarter as well. So the banks and the brokerages in any case have been bullish on crude oil prices for much of 2019. And that is where the prices are taking their strength from as well.
Okay, thanks a lot for that. So that's a fairly sharp rally that you've seen in crude prices, now inching towards the $65 mark. But it's not caused so much pell-mell in the Indian stock markets, you will have to say, which are in the grip of a fairly vicious short covering. Nevertheless, there are questions on the oil marketing companies. Ranu Jai has tweeted to us with a query on IOC. He has been holding shares at 149 rupees a piece, wants to know if he should continue to hold it or sell. Mayuresh, what's your sense about IOC?
So Lata, in general, I think for the OMCs, I think the gross marketing margins have been relatively stable, and if crude is expected to remain stable, I think taking account Manisha's point, if it does spurt higher, that does hurt the sensitivity to earnings. But if it does stay in a range, the marketing margins probably increase. IOC probably gets least impact because HPCL, BPCL have larger marketing margins. Nevertheless, I think the Singapore GRMs for this quarter is also at an 8-year low. So how the refining margins are going to pan out is also going to be critical for OMCs. Add to that, I think the capex that they're putting through. For IOC in particular, I think the utilization level at its Paradip plant, the expectations of GRM stabilizing because of the complexity that they've got, and the expectations of cash flows remaining stable, I think are probably stable points from a book value perspective. So if the investor has a couple of years time horizon, considering all these variables at play, I think he can very well hold on to this one.
Okay, but it's lost a lot. He has bought it at 144. He's sitting on a 20 rupee loss, which works out to about a 15% loss for him as of now. Mitesh, the chart seems to be headed lower, isn't it?
I would believe so. I think this stock, we have had some sell calls also on the medium to longer term basis also is suggesting lower levels to be tested. I would be slightly negative on IOC, and I would believe that the stock is possibly heading towards levels close to about 110 and even lower. So I think around about 12 to 15% kind of downside could very well happen over here. So exit or avoid for me.
Okay. Well, we take a break on that note, but let's leave you with some market opinion, very important market opinion from one of the biggest fund managers in the country, S. Nareen of ICICI Prudential AMC. We spoke to him earlier today, and here are his views on various sectors.
In the large caps, barring about 10 mega caps, the rest of the market has become cheaper. Having said that, can markets go to undervaluation? They can go to undervaluation. Right now, they are not in undervaluation, which is the reason I would say, barring the PSU pack, I would say the rest of the market is only fairly valued today. A few stocks are overvalued. And I believe that over the course of this year, I think it's better to invest systematically because of the volatility, which is likely over the course of this year. And I believe that if I had to look at it, the banks had a very, very bad period for a long period of time, 7 years. So there's no reason that the outperformance should get over in a 3-month or 6-month period. I believe that there is good scope for banks to do much better than NBFCs and HFCs. And I think the key criteria that we use is a bank having a good CASA franchise. And I think if a bank has a good CASA franchise, we are very positive. If a bank doesn't have a good CASA franchise, we are not that positive. I think from a long-term point of view, Indian auto market is one of the most attractive markets in the world, and I think they will grow significantly. I think tactically it's a discretionary industry, and as interest rates go up, I believe that there can be a tactical down cycle at this point of time.
So let's get to the fourth then. The Nifty Bank and the mid-caps outperformed benchmark indices. While Yes Bank provided support to the Nifty Bank, NBFCs and PSU banks pulled up the mid-cap index. Indian Bank, IDBI Bank, M&M Financial, L&T Finance really topped the charts in today's trade.
Okay, questions. This one comes from Ramesh Dutt from Andhra Pradesh. He has written to us with a question on PNB. Says he has 190 shares purchased at 160 rupees a piece, and he wants to know if he should hold or sell. 190, 160. What would you say, Mitesh? Yeah, chart. What is the chart saying?
Yeah, PNB I think has now come down to levels where we've seen on historical basis multiple important lows being made on the monthly chart. That's closer to about 60 to about 62. I would suggest adding on more if he can. Though not the best strategy, because I don't think the long-term charts are pointing on the upside, but around these levels I do expect the stock to stabilize and reverse. So try to get down the average cost, put a stop below 55 on the quantity acquired, and on any rallies to 90 to about 95 on the upside, try to exit the stock and therefore at least come out with much lower loss than what you're currently into.
Mayuresh,
are you a buyer at 72? He's sitting on a big loss.
Yeah, absolutely. So I think I would concur with Mitesh. I think if he intends to hold on with the stock, he can average and then possibly look at how the performance will be. The performance was quite okay, Lata. I think we've discussed this last week as well. I think the recoveries were quite reasonable. And I think the worst probably in terms of the financials would be over. However, our bias would still remain with the private guys. So I think Axis, ICICI, or even a Federal Bank for that matter.
Okay, all right. So let's get to the fifth and the last headline for today. DHFL shares saw a sharp recovery after the joint MD and CEO Harshal Mehta clarified on his resignation. In an exclusive interaction with cnbc TV18, he said his resignation was in line with the move to bring in a strategic partner. He also added that he would continue to head the retail portfolio, which forms 80% of the loan book. Listen in.
This move is predominantly in line with the last announcement, which was made by chairman in the investor call, in the light of his announcement of getting a new strategic partner within the given time frames. And since that involves intense schedule, this decision was taken to say that, look, you focus on that. He had made the announcement of how the new business model is around originate to sell. So it also gives a sharp focus around that to build the model retail business model around originate to sell, which has been working well.
Okay, so that's the model that they're going to concentrate on and find a partner. Let's shift our focus to other stocks that were in the news because of their earnings. First up, Ashok Leyland, the auto giant, posted all-round beat in the third quarter. Anisha Jain has the highlights.
Well, the operational performance for Ashok Leyland was better than expected. It is 15 quarters out of 16 that the company has managed to report a double-digit margin number, and this time the margin came in at 10.3% versus an expectation of sub 9%, and that was the key highlight and the key positive in this number. Moving on to the profit figure, which beat expectations by around 50 to 60 crores and came in at 380 crores. Now that was partly aided by the tax, which was lower at 100 crores versus 200 crores, and even the other expenses were lower on a year-on-year basis. And lastly, keep an eye out on the realization as well. They are down about 2.5% on a quarter-on-quarter basis and came in at around 14.27 lakh rupees per unit. The decline is a tad bit more than what the street expected, but given the fact that the company has been able to maintain a solid margin profile, that should go down positively with the street. Back to you. Yes, absolutely. It's the margins. Thanks very much, Anisha, for that. That's an Ashok Leyland. But NBCC too reported its third quarter numbers. The stock ended 5% lower as margins were a disappointment. The core consultancy business performance too was weak, while real estate business supported the bottom line.
And finally, in other earnings reaction, Karur Vysya Bank lost in trade today as the management guided for over 1,800 crore rupees of slippages over the next 5 quarters. That bank announced its numbers yesterday and saw a sharp fall after the numbers. Repco Home Finance too declined due to weak asset quality, well, slightly weaker asset quality and some pressure on disbursements. We spoke with Repco's management earlier today. The MD and CEO Yashpal Gupta said the cost of funds is a challenge for the company as many banks are now getting into the same game.
Only challenge that we are facing is the cost of funds has gone up, and obviously there is a time delay in passing on the cost of funds to the customers. That has had an impact on our spread. Our target is to maintain 3% spread plus minus 10 BPS here and there. So right now the challenge for us on the liquidity front is not availability of money, but cost of availability of money. Historically, if we see, our trend is that we tend to report higher NPS in the first quarter and third quarter, and lower NPS in second quarter and fourth quarter. So by the year end, we are targeting to bring it down significantly reduction from 3.9% to around 3%.
We have just about 10 seconds. So Mitesh, Karur Vysya, DHFL, Repco, anything for a long bet?
See, I think all these stocks, Karur Vysya I have not been tracking regularly, but I think all these stocks, if I look at the initial chart, I think have gone through some kind of medium to longer term downtrend, and I don't think there is a sign of reversal. Repco had a trading rally in between, but I really wouldn't, be wanting to buy that. DHFL today has given some reversal. 145, 150 could be a trading target for the next few days. But again, this doesn't look like a sustainable bounce back in the sense that it's kind of a V-shape. So typically V-shape recoveries are being tested again. The lows are being tested again. That's a very strong chance of that. So yes, from a 1-to-day trading point of view, only DHFL, but otherwise avoid, if you want to invest, avoid all of them.
All right, Mitesh, absolutely out of time, but to put your warning on the table. Thank you very much, Mitesh and Mayuresh, for joining us.
Well, yes, it's a wrap on Markets Today Talkback. Thanks very much for watching, and stay tuned for more news and updates.